There are a couple of very interesting moves that I'm watching on the longer term charts with some of the volatility specifically in energy. So I'm taking a look at the XLE right here. The XLE ETF has primarily Exxon and Chevron. And these two stocks are absolutely selling off today. Now, one trader's crash is another trader's treasure. And if I'm taking a look at what's happening on these two, one of the long-standing alerts that we have in the Sector Secrets Mastery long-term growth part of our life is an entry closer to these dots down there. So if this is going to usher in a more significant move to the downside, this is absolutely something I'm looking at for Exxon. So we still have a little ways to go, and we got very close before. But I am looking for a long-term entry in this, probably somewhere between 102 and a half and about 101 even. And I will look to buy shares and or leaps. And if I'm looking at leaps, they'll be 12 months out minimum, preferably 16 if the budget, or 18 if the budget allows. They'll be at the money, and I'll buy them once we reach this price trigger. So that's something I'm looking at there on Exxon for. A lot of questions today on Netflix. Would I like to buy Netflix? Absolutely. And when folks say, Rog, how much of a pullback are you looking for? Well, this is the weekly time frame of Netflix. So once again, I'm looking at a longer term chart. This is the long-term account growth approach, where what I'm looking for are weekly time frame setups where I can hold the trade usually somewhere a minimum of about 6 months to multiple years. And in that, I can either buy the shares, especially if it's a share price that also will yield a dividend, or in the case of Netflix, where these shares are ridiculously expensive, I can buy leaps. And look, I'll tell you what, I would love nothing better than Netflix to come down to about 1,100. And when I say as we're cruising up higher through 1,300, hey, there might be an opportunity to buy a pullback. It's hard to believe because most traders are looking at the FOMO, or as we say in the Sector Secrets Mastery, the FOMO, MOMO, bozos, where every new high is a reason to buy. Well, that can work sometimes in the context of a trend. I'm not saying it can't. But wouldn't it be far better, instead of buying at highs, like these, right? Wouldn't it be better to focus on pullbacks like these? The risk-reward ratio is going to be so much better. That's exactly what I'm looking at here. So really anything at or below 1,100 is going to be very tempting for a pullback buy. And I would love to see another $100 sell-off day, a week, I should say, in Netflix. And let's take advantage of what would be an epic buy to the upside. So again, remember, one trader's crash is another trader's treasure. What else are we looking at in this current environment? There's a lot of questions folks have been asking me about CRWV, CoreWeave. And we'll take a look at NVIDIA as well. I'm not a huge fan of this particular one. It's a pretty young stock. But if someone were to ask me, Rog, what are you looking for? I'm looking for at least a 50% retracement of what this is, which is for my 50% work, I'll call this the last major move. And usually the last major move has a minor low and a minor high to help define it. And a 50% retracement would be amazing. Now, again, if I were to say when this trade was above 180, I'm looking to buy around 110, 109. That sounds crazy until we're trading around 125. Now, another thing that can be done would be to anchor a volume weighted average price, but I actually like the 50% a little bit better. But this anchored volume weighted average price would certainly be something to keep an eye on. And another thing you can do is anchor it on the daily. I mean, I'm doing this on the weekly, but you can do it on the daily as well. And this would be a weekly time frame setup for those of you that are looking at a longer term weekly leaps, months, maybe years type setup. Unfortunately, NVIDIA not pulling back enough. I've had a lot of questions about long-term Tesla. Tesla's kind of interesting. So this is what I would do with Tesla if you have a long-term setup. I would look to find the range that would give me at least the lower quarter of this Darvis, which is typically a pre-momentum setup. That would put my buying opportunity around 252, call it 253, down to the support of the Darvis here, right around 215. The propulsion dots, which have been, I mean, look at this. This is pretty good. It's not a hard floor. It's a soft floor, but it's certainly been a reason for the buyers to step up. So definitely keep an eye on those prop dots too, which is inside this range. And again, things sound crazy. You know, if I say at 375, I'm waiting for 252, it sounds nuts until we start breaking 300. So I would keep an eye on that for sure. This is the halfway and very aggressive level of momentum. So if you're looking at something a little bit more aggressively than I am, keep an eye on that 291 area. Another stock that folks have been asking me about with long-term is Apple. If I'm going to buy Apple again, we already own this in the long-term account, but it's going to be closer to about 281 or the lower quarter of this Darvis area. And what I'm walking you through with all these examples are the kind of setups that I look for my longer-term trading. And whether it's taking advantage of dramatic moves on earnings or dramatic moves on options expiration Friday or just general news that can drive prices down, again, keep in mind when everyone's panicking, we got to ask, is there a sale going on somewhere? And this is what the current portfolio in the Sector Secrets Mastery long-term account growth room looks like. We're always looking to build positions in this ongoing. There's only 17 holdings here now. I don't mind really. I like to have a portfolio or a total number of longer term, no greater than 35. If things are really on sale, it might be closer to 50, but I keep a limited number of names. And you know who else did this? You guessed it, Grandpa Buffett. So we really want to be choosy. And I might look at names that are underperforming overall. And I might say, you know, CHD, TMUS, some of these names, Apple, some of these names may not, although Apple I can't really complain about, but I might look at some of these with a multiple year look, 1 to 3 years, what could I expect in terms of the trajectory of these names. So if you're interested in this kind of analysis, longer term holdings, to basically not replace what you're doing with swing trading, but supplement what you're doing with your day trading, with your swing trading, this is a really good way to look at it. In addition, just to give you an idea of the kind of positions we still have in the Sector Secrets Mastery, still long hood. RTX, we're closing today for, I think, about a 320% winner. Hood, we still have another week to go, punching up to continuous all-time highs. Entered Bitcoin today. Entered also Taiwan Semi today. And also Chevron, which may not be long for this world. And if something doesn't work the way I need it to work, I will cut it. And Chevron's likely going to be one of those grand opening, grand closing trades. Now, I mention this because Chevron is going to be a 25% premium loss, right? And I think this is really important. 25% premium loss. And that's okay. Sometimes trades just don't do what I need them to do. But on the flip side, we bought RTX for $3.50 and closed it somewhere north of $12. I'm trying to think, what was it? What was the close on RTX? And just over $12 today. And, I don't mind taking 25% paper cuts when I'm able to get a 3-4x winner. Got to keep those losses small. So a couple ideas here as we're wrapping up the week. And if you're looking for something really cool to move the needle for you over the weekend, come check out what we're doing tomorrow, Saturday, the 19th at 11 a.m. You can still join simplertrading.com/grow-strat, the account growth strategy, things that we're doing in the longer term accounts to supplement what's going on. Macroeconomic turmoil, lots of volatility, and how do you find those pullbacks that you can hang on to for months, if not years, via shares or via leaps? I'll see you in the next update.